While regular Americans are crying over mortgage rates, billionaires are scooping up mansions like socks on clearance. Fresh data just dropped, and it's insane. You know what the American housing market has in common with my fridge? Both are empty in the middle, but the top shelf? Absolutely magnificent. Compass just released their year-end report, and what's happening is wild. While the regular housing market was lying in a deep knockout, sales at their lowest point in decades, mortgage rates biting like a rabid dog, the ultra-luxury real estate market decided to throw a party. And what a party it was. So here's the fresh data. Sales of homes over $10 million in the top 10 US markets jumped 32% year over year. 1,600 transactions. Total volume, almost $29 billion. Los Angeles completely lost its mind, up 54% compared to the previous year. 292 homes at 10 million plus. And this, despite wildfires tearing through the area early that year. Apparently, when you've got 110 million for a little house, you're not too worried that the neighboring area got a bit toasty. Speaking of 110 million, Australian billionaire James Packer bought himself an estate in Bel Air. 2.5 acres of land. Name? Le Belvedere. Sounds like an expensive cheese, but it's just a house. And former Google CEO Eric Schmidt and his wife picked up Spelling Manor in Holmby Hills, also for 110 million. Apparently, that's the psychological threshold. Anything less would be embarrassing. But why is ultra-luxury growing when everything else is falling? The answer is simple. Rich people don't take out mortgages. They don't care what the rate is, 6% or 16%. They pay cash. And when the stock market is rising, especially tech stocks like Nvidia, these people end up with, let's call it an excess of liquidity. And where do you put it? That's right, real estate. A separate story, Silicon Valley. Sales of homes at 10 million plus rose 36% there. In San Francisco, up 50%. A local real estate agent literally said, the eye of Sauron has sort of turned away from San Francisco. He was talking about how the city stopped being criticized for homelessness and crime. Now it's officially in legitimate recovery mode. When a real estate agent quotes Lord of the Rings, you know the market has truly changed. And here's what else is interesting. Ultra-luxury has spread beyond traditional locations. It used to be Los Angeles, New York, Miami, Aspen. Now, Phoenix, San Diego, Dallas. In San Diego, a home sold for $50 million, a county record, with a ping-pong pavilion. Because when you've got $50 million for a house, you can't play ping-pong in a regular room like some kind of peasant. In Naples, Florida, a deal for $225 million, the priciest sale of the year in the country. Naples, Florida, a city that used to be associated with retirees and early bird dinners. Now let's take a moment to remember the other 99% of the population. Average mortgage rate, around 7%. Home prices, at historic highs. Affordability, at historic lows. Young Americans aren't dreaming of houses anymore. They're dreaming of an apartment they can rent without 3 roommates. And against this backdrop, 1,600 deals at 10 million plus. In 1 year. 2 worlds, 1 country. Risks and outlook. But what's next? Economists are cautious. This whole feast depends on a handful of tech companies and their stocks. If the AI bubble pops, if Nvidia suddenly stops growing, everything could change very fast. As one analyst put it, the market's fate depends on the performance of just a few companies. When the entire luxury real estate market hinges on how well graphics cards are selling, that's a bit concerning, wouldn't you say? So the question is, will this banquet repeat itself this year, or are we watching the peak before the fall? So what do we have? Fresh data showing a perfect metaphor for modern inequality. At the bottom, stagnation and despair. At the top, record sales and ping-pong pavilions. And you know what's the most ironic part? The very technologies that were supposed to make the world better for everyone have so far just made the real estate market better for the people who create those technologies. That's how it is. If you enjoyed this breakdown of economic madness, subscribe to the channel. Hit that like button if you also can't afford a house with a ping-pong pavilion. And in the comments, let me know. Do you think this is a bubble or the new reality? Will this trend continue? See you in the next video.